Hello, everyone. I'm sure you'll agree with me. The success of a trader or an investor is primarily determined by his or her ability to find an edge or a gap in the market. Over the years, people have built or are in the process of building tools that can help them find these hidden gems. In this video, I'll be talking about one such powerful tool and the tool that every trader or investor should have in his toolkit. And the tool in question is the relative rotation, or sometimes as it's commonly called as sector rotation graph. We'll be taking a closer look at number one, what this tool is all about and how it works. Number two, review the Python code that I had built that will construct this tool for you. And number three, we will also discuss how we can use this tool for better decision making. So let's get started. If this is your first time here, welcome. My name is Vivek and I'm a financially independent algo trader. This channel is all about building a community of algo traders. We discuss everything about algo trading using Python, building and backtesting trading strategies, market updates, and much more. Please do visit our community website, FabTrader.in. Also, do check out my other YouTube channel, FabWealth, where I talk about my own financial independence journey and share tools, methods, and strategies that help me achieve my financial freedom. Thank you. This video is part of my Algo Tools series, where we will be building a range of Python-based trading tools. Now, you might be wondering what's the purpose of these individual tools, right? So think of a skilled mechanic. His efficiency depends on the tools at his disposal. The same goes for an algo trader as well. While these tools may seem small and standalone right now, I ask you to trust the process. As we progress, you will see or you'll start seeing the bigger picture. Soon, it'll be crystal clear how combining these tools can completely transform your trading game. So stick around, it's going to be worth it. If you're already familiar with relative rotation graphs, feel free to skip this section. For those who aren't, I'll do my best to break it down with a simple or maybe slightly unconventional example. It might not be perfect, but I promise it's the easiest way I could think of to explain this concept, so please bear with me. You've probably heard of horse racing, right? Now imagine you're invited to one and someone presents you with a challenge. There are 4 horses running in the race, and if you can't pick the winner, you'll walk away with $1 million. Take a few seconds and think, what are the 2 top key factors you would consider before placing your bet? So you're ready with your options? Let's see if we are on the same page. As far as I'm concerned, the first factor is the horse strong enough? Does it have the stamina to last the entire race? Strength is key. And number 2, the second factor, strength is great, but can the horse run fast? At the end of the day, speed is what wins races, correct? Now let's break this down logically and plot it on a chart. The horizontal line represents the strength of the horse. So the positive side is where the horse is stronger, and this is where it is weak. And similarly, the vertical line represents it. How fast is it? This is the fastness, and this is the slowness. So automatically, you get the picture where I'm trying to go to. For example, these 4 horses, the horse A is both strong as well as fast. Horse D is stronger, but it's slower. Horse C is both weak as well as slow, and horse B is faster, but it's not at just a great shape right now. So suddenly, when you look at things this way, it becomes very clearer, isn't it? Horse A, no doubt, is the horse that you want to bet on. And the relative rotation graph is very similar to the same concept. Let's now look into the actual RRG itself. If you haven't joined our Telegram group, please do so. I share market insights, algo trading tips, and new video notifications, and this way you can stay up to date with our community news and events. The RRG is very simple. At the same time, it's very beautiful and powerful as well. It basically has 2 indicators, right? The one is called the JDK-RS ratio, which is nothing but your relative strength ratio. And JDK is nothing but the person who invented it. I think it was Julius D. Kempener, so it's named after him. And then the second indicator is the JDK-RS momentum. And when you combine these 2 indicators, whereas the relative strength, it basically measures the security strength against the benchmark performance, whereas the momentum indicates the rate of change in its relative strength. So when you combine these 2 indicators together, and that's what actually makes the RRG. Now let's discuss these 2 indicators in a bit more depth. The first one, which is the relative strength. Relative strength, as you know, is nothing but the security that you're trying to analyze. You compare it with the benchmark. All you're trying to do is you have the securities returns divided by the benchmark return. So whenever you have a value more than 1, it automatically means that your security is doing much better than the benchmark. Anything less than 1 is the benchmark, your particular security is not able to beat the benchmark, right? Typically, they multiply the final value by 100. So always the RS ratio is mentioned as, in terms of 100. So 100 being that your security is exactly the same as the benchmark. Anything more than 100 is basically your security is beating benchmark. Anything less means that it's trailing your benchmark. That's what the relative strength basically indicates. So the relative strength alone is only a part of the puzzle. It doesn't give you the complete picture. You need one more ingredient to make it whole, which is where the momentum comes in. You from relative strength, you first establish that your security is doing much better than the benchmark, which is number one. It's very important. And number two, you're trying to establish that it also has momentum, and that is indicated by the RS momentum. Right now, you don't have to worry about the formula for calculating these indicators. It's all provided in the blog as well as the Python code. So right now, you don't have to worry about it. Now, if we take these two indicators and then do a similar plot, a scatter plot of the same values. For example, in this case, the x-axis is going to be your relative strength and the y-axis is going to be momentum. This particular quadrant, which is the first quadrant, the strength is still weaker, but you're seeing a good momentum, and then the stock is about to basically pick up speed, and this is where it's called the emerging leader. And typically, this is where you look for buys as well, because you want to get into the trend early on so that you can cash that alpha. So this is where you look for buys. This second segment or quadrant is where the momentum is high and also the strength has picked up. So your stock is automatically in the high performing stock. So at this point in time, you don't look to sell it. You're basically holding your position. And then in this quadrant, you're clearly seeing weaknesses. The momentum has kind of dropped. It still holds some strength in it, but the momentum is completely lost. This is where it's called the mature trend. And you typically look for ways to get out of your holdings at this point in time. Right? And finally, the last quadrant, where it has clearly lost the momentum, also the strength, and it is an underperformer at this point in time in the market. And this is definitely the stocks or the sectors that you try and avoid. You never buy at this stage. So I guess the concept is overall clear. Now let's take an actual example of how an RRG looks. This is how a typical RRG looks. The same four quadrants. We have the improving quadrant, at which point in time you look for buys, and then the leading quadrant where you look to hold, and then the weakening quadrant. As soon as it enters here, you look to sell and get out, and then the lagging quadrant you try to avoid like hell, right? So ideally, what we're looking at is basically a stock which is increasing in momentum, gaining strength, and then all the way going up to this range, and this is exactly the range that you're trying to, make use of, and then this is the range that you try and avoid. The items on an RRG is typically shown as with a head and a tail. I know it kind of looks like sperms under a microscope, but the reason why it's given is if you just give the head portions alone, you can clearly say which quadrant they are in. But when you clearly see the tail, you can see the trend that particular stock is taking, which tells a lot more story than just looking at which quadrant it belongs to, right? So you can actually increase the tail, the duration of the tail, and then you can also clearly see the pattern. And I think one thing that we clearly emerge from this picture is that you see a natural way the stocks are going cyclical, right? Typically, what we think is that when we look at the price of a stock, it's all just random. There's no real sense to it. That's how we feel it. But if you really look at it, this chart, the complete picture basically jumps at you, which is that most of the stock actually have a cyclical nature of how it operates. And when you know the secret, and when you know where they are right now within the the overall four quadrants, you can either pick or avoid and make better decisions. Let me just quickly jump into its Python implementation. This code is available in the blog post. I'll provide the link in the description, as well as I'll pin this on the comment section so you can download it and try it for yourself. This actually currently uses both Python and Streamlit, and then I'll show you how to execute this. For people who are not familiar with Streamlit, you basically give Streamlit run, and then you provide the name of the Python file to run. So this is how the web app would open. You could provide the benchmark here. In this case, I've given Nifty 50. It can be any indices that you want. And then you give the list of tickers that you want to compare it against. The period at this point in time, I've given 180 days. Again, you can increase or decrease this however you want. And the tail length, I've given 5 days. Again, you can increase it the way you want it. So you can clearly see that I've given most of the the most popular sectors here, and the graph would clearly tell you where each of those sectors are, and depending upon this, you can make better decision as to whether to exit those sectors or hold on to them, or look for buying opportunities. So that's how this map, this graph is very, very useful. And you can also go ahead and change it to anything that you basically want to check, TCS and Infi, and then it will show up. This is TCS and this is Infi. TCS looks like it's in the improving quadrant. Infi, for obvious reasons, this quarter it's currently in the lagging still, right? So that's how simple it is. And then if you want to see the path that it's currently taking, TCS clearly you can see that it's improving, whereas Infi is still stuck at the bottom. So that's how simple the implementation is. So like I mentioned, all the information that I just told you, or in fact more information than what I just spoke, is already available in this blog article, and I'll give link to it. And it also contains the entire implementation, the Python implementation. The code is available. All you can do is just simply copy The only change that you might have to do is supply your own function that gives the historic data. Right now I'm using zerodha. You may want to change it to include your own function to get historic data. Rest all would work as is. And then in terms of how to run this, since it's a Streamlit app, like I said, just type Streamlit space run space and then provide the name of the Python file, and that should open up your app in a web browser like this. And the blog also gives you some practical applications of how you could effectively use RRG. So please do read through this. So that's pretty much it for this video. Please try this out and let me know how it went. Thank you. Thank you. If you genuinely found this video useful, please consider subscribing and liking the video. And I will see you soon in another video. And until then, take care and happy trading.